Hello and welcome to study session number 26 of Daily Memory Lab. In today's study session, we will start with round 5 of Supply Under GST, page number 1 to 10, and then we will do round 4 of same chapter, 66 to 72 page numbers, and then we'll go to charge of GST, round 3 of page numbers 28 to 33, round 2 of 50 to 55, and then we will see the fresh pages of today's. So let me set the study session intention before we begin. Now I'm going to study for 30 to 60 minutes with full focus. In this study session, I lower down all my expectations and embrace imperfection. I may or may not get big breakthroughs in this study session, and I am totally okay with it. I will most likely make mistakes in the next 30 to 60 minutes, and if I make them, I am not going to judge myself. I embrace my mistakes and reset my ambitions. My goal is not to achieve perfection. My goal is only to make a tiny bit of progress in the next 30 to 60 minutes. On that note, let us begin Supply Under GST, round number 5, page number 1 to 10. Introduction. A taxable event is any transaction or occurrence that results in a tax consequence. Before levying any tax, taxable event needs to be ascertained. It is the foundation stone of any taxation system. It determines the point at which tax would be levied. Under the earlier indirect tax regime, the framework of taxable event in various statutes was prone to catena of interpretations, resulting in litigation since decades. The controversies largely related to issues like whether a particular process amounted to manufacture or not, whether the sale was predetermined sale, whether a particular transaction was a sale of goods or rendering of services, etc. The GST laws resolve these issues by laying down one comprehensive taxable event, that is supply of goods or services, or both. Various taxable events, namely manufacture, sale, rendering of service, purchase, entry into a territory of state, etc., that existed prior to introduction of GST, have been done away with in favor of just one event, that is supply. The GST law, by levying tax on the supply of goods and or services, departs from the historically understood concept of taxable event under the state VAT laws, excise laws, and the service tax law, that is sale, manufacture, and provision of services respectively. In the GST regime, the entire value of supply of goods and or services is taxed in an integrated manner, unlike the earlier indirect taxes which were charged independently either on the manufacture or sale of goods or on the provision of services. Relevant definitions. Goods means every kind of movable property other than money and securities, but includes actionable claim, growing crops, grass, and things attached to or forming part of the land which are agreed to be severed before supply or under a contract of supply. Services means anything other than goods, money, and securities, but includes activities relating to the use of money or its conversion by cash or by any other mode from one form, currency or denomination, to another form, currency or denomination for which a separate consideration is charged. Explanation. It is clarified that the expression services includes facilitating or arranging transactions in securities. Section 2, clause 102. Principal means a person on whose behalf an agent carries on the business of supply or receipt of goods or services, or both. Section 2, clause 88. Competent authority means such authority as may be notified by the government. Section 2, clause 29. Family means the spouse and children of the person and the parents, grandparents, brothers and sisters of the person if they are wholly or mainly dependent on the said person. Section 2, clause 49. Government means the central government. 2, clause 53. Local authority means a panchayat, a municipality, a municipal committee, Zilla Parishad, district board, and any other authority legally entitled to or entrusted by the central government or any state government with the control or management of a municipal or local fund, cantonment board, regional council or a district council constituted under the 6th schedule to the constitution, a development board constituted under article 371 and 371J of the constitution, a regional council constituted under article 371A of the constitution. Consideration in relation to the supply of goods or services or both includes any payment made or to be made, whether in money or otherwise, in respect of, in response to, or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or a state government. The monetary value of any act or forbearance in respect of, in response to, or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or a state government. However, a deposit given in respect of the supply of goods or services or both shall not be considered as payment made for such supply unless the supplier applies such deposit as consideration for the said supply. Section 2, Clause 31. Actionable claim. Actionable claim means a claim to any debt other than a debt secured by mortgage of immovable property or by hypothecation or pledge of movable property, or to any beneficial interest in movable property not in the possession, either actual or constructive, of the claimant, which the civil courts recognize as affording grounds for relief, whether such debt or beneficial interest be existent, accruing, conditional, or contingent. Manufacture means processing of raw materials or inputs in any manner that results in emergence of a new product having a distinct name, character, and use, and the term manufacturer shall be construed accordingly. Money means the Indian legal tender or any foreign currency, check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler's check, money order, postal or electronic remittance, or any other instrument recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, but shall not include any currency that is held for its numismatic value. 2. Clause 75. Taxable supply means a supply of goods or services or both which is leviable to tax under this Act. Taxable territory means the territory to which the provisions of this Act apply. 2 Clause 108, 2 Clause 109. Non-taxable territory means that territory which is outside the taxable territory. 2 Clause 79. India means the territory of India as referred to in Article 1 of the Constitution, its territorial waters, seabed and a subsoil underlying such waters, continental shelf, exclusive economic zone, and or any other maritime zone as referred to in the territorial waters, continental shelf, exclusive economic zone, and other maritime zones Act 1976, and the airspace above its territory and the territorial waters. 256. Supplier in relation to any goods or services or both shall mean the person supplying the said goods or services or both, and shall include an agent acting as such on behalf of the supplier in relation to the goods or services or both supplied. However, a person who arranges or organizes directly or indirectly supply of specified actionable claims, including a person who owns, operates, or manages a digital or electronic platform for such supply, shall be deemed to be a supplier of actionable claims, whether such actionable claims are supplied by him or through him, and whether consideration in money or money's worth, including virtual digital assets, for supply of such actionable claims is paid or conveyed to him or through him or placed at his disposal in any manner, and all the provisions of this Act shall apply to such supplier of specified actionable claims, as if he is the supplier liable to pay the tax in relation to the supply of such actionable claims. Recipient of supply of goods and or services means where a consideration is payable for the supply of goods or services or both, the person who is liable to pay that consideration. Where no consideration is payable for the supply of goods, the person to whom the goods are delivered or made available, or to whom possession or use of the goods is given or made available. And where no consideration is payable for the supply of a service, the person to whom the service is rendered, and any reference to a person to whom a supply is made shall be construed as a reference to the recipient of the supply, and shall include an agent acting as such on behalf of the recipient in relation to the goods or services or both supplied. Okay, person includes an individual, HUF, company, firm, LLP, AOP, BOI, whether in India or outside India, any corporation established by or under any central state or provincial act, or any government company as defined in section 2 clause 45 of the Companies Act, any body corporate incorporated by or under the laws of a country outside India, a cooperative society registered under any law relating to cooperative societies, local authority, central government, state government, society, registered society, society as defined under the Societies Registration Act, trust, every artificial juridical person not falling above. So person includes almost everything. Now, concept of supply. So we have section 7, section 8, schedule 1, schedule 2, schedule 3, 5 things. Okay. Section 7 talks about meaning and scope of supply. Section 8 is about composite and mixed supply. So this now gives us a wonderful bird's eye view of this entire chapter. This is the last 5 to 10 pages of this chapter, the last segment of this chapter. Meaning and scope of supply is the basic charging section, and then you have schedule 1, activities to be treated as supply even if made without consideration, like services to related party, transfer between related persons, distinct persons, so that thing. And then activities or transactions to be treated as supply of goods or treated as supply of services, like gray area things, restaurant services, works contract, whether it should be treated as supply of goods or supply of service. So that clarification given in schedule 2. Schedule 3 is about like exemption, which shall be neither as supply nor as supply of goods or nor as supply of services. This is like a negative list. Okay, let us proceed. Supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal made or agreed to be made for a consideration by a person in the course or furtherance of business. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration. Explanation: for the purposes of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, or any other judgment, decree or order of any court, tribunal or authority, the person and its members or constituents shall be deemed to be two separate persons, and the supply of activities inter se, that is between them, shall be deemed to take place from one person to another. Okay. Clause B, importation of service for a consideration whether or not in the course or furtherance of business. And then clause C, the activity specified in schedule 1 made or agreed to be made without a consideration. Next, subsection 1A, where certain activities or transactions constitute a supply in accordance with the provisions of subsection 1, they shall be treated either as supply of goods or supply of services as referred to in schedule 2. So go and refer to schedule 2. Based on that, you decide whether it is only one thing, supply of goods or supply of service. Categorically decide. Next, subsection 2. Notwithstanding anything contained in subsection 1, activities or transactions specified in schedule 3, such activities or transactions undertaken by the central government or state government or any local authority in which they are engaged as public authorities, as may be notified by the government on the recommendations of the council. So subsection 2 of section 7 removes the need or removes from being included as supply shall be treated neither as a supply of goods nor as a supply of services. So this is subsection 2. Next, subsection 3. Subject to the provisions of subsection 1, 1a and 2, government may, on the recommendations of the council, by notification. So 7 subsection 1 clause 3 is like a notification. It's like an allowance thing. Government can, by notification, supply as goods and not as service, supply as service and not as goods. So this is like an extension of schedule 2. So schedule 2 already contains specific things, already predefined things, but this subsection says that government can also, by new notification, give you new amendments and decide them they are whether supply of goods or supply of service. So I can definitely say that the clarity I had about this whole BAR Act provision of this section 7 to schedule 3, the first time versus the fifth time reading, it's miles apart. I have a proper bird's eye view. I can actually draw a mind map right now and explain exactly what is given in where. So at least now I know how the entire arrangement of this section 7 and at least this entire second chapter is given. So you have section 7, meaning and scope of supply, that talks about 3 schedules inside the main section 7 itself, and then you have section 8, which talks about composite supply and mixed supply. That is like the last segment of this chapter. But if you talk about schedule 1 considers deemed supply, even with or without, even if you do it without consideration, it shall be deemed as supply and it will be subject to tax. Schedule 1. Schedule 2 is about removing the gray area, deciding black or white. So restaurant service, you don't know whether it is a supply of goods or service because both are present, so you treat it only as supply of service. So that is schedule 2. All some similar things, schedule 2. And then schedule 3 talks about negative list, some things that do not be deemed as supply anymore. So even section 7 subsection 1 talks about sale, transfer from one person to another for a consideration during the course or furtherance of business. So this concludes our first segment. I just want to show that I can see myself, feel the difference of clarity and confidence between round 1, where I was on 7th October when I read this for the first time, and where I am today after having read it for the 5th time. Now let us go and read page number 66 to 72 for the 4th round. Composite supply means a supply made by a taxable person to a recipient and comprises 2 or more taxable supplies of goods or services or both or any combination thereof, which are naturally bundled and supplied in conjunction with each other in the ordinary course of business, one of which is a principal supply. This means that in a composite supply, goods or services or both are bundled owing to natural necessities. The elements in a composite supply are dependent on the principal supply. Principal supply means the supply of goods or services which constitutes the predominant element of a composite supply and to which any other supply forming part of that composite supply is ancillary. Section 2, clause 90. Works contract and restaurant services are classic examples of composite supplies, but the GST law identifies both as supply of services and applies both of them as supply of services and chargeable to specific rate of tax mentioned against each of such services. However, in respect of composite supplies, that is, the other than the two categories mentioned above, the need to determine the supply as a composite one will arise so as to determine the appropriate classification of such supply as supply of goods or supply of services, as also the appropriate rate of tax. It will be necessary to determine as to whether a particular supply is naturally bundled in the ordinary course of business and what constitutes principal supply in such composite supplies. How to determine whether the services are bundled in the ordinary course of business. Whether the services are bundled in the ordinary course of business or not would depend upon the normal or frequent practices followed in the area of business to which services relate. Such normal and frequent practices adopted in a business can be ascertained from several indicators, some of which are listed below. The perception of the consumer or the service recipient. If large number of service recipient of such bundle of services reasonably expect such services to be provided as a package, then such a package could be treated as naturally bundled in the ordinary course of business. Mobile phone is always sold with battery. Majority of service providers in a particular area of business provide a similar bundle of services. Bundle of services of catering on board and services of transport by air is a bundle offered by majority of airlines. The nature of the various services in a bundle of services will also help in determining whether the services are bundled in the ordinary course of business. If the nature of services is such that one of the services is the main service and the other services combined with such service are in the nature of incidental or ancillary services which help in better enjoyment of a main service, then it would be treated as services bundled in the ordinary course of business. Service of stay in a hotel is often combined with the provision of breakfast and dinner provided free of cost during the stay. Such service is an ancillary service to the provision of hotel accommodation, and the resultant package would be treated as services naturally bundled in the ordinary course of business. Other illustrative indicators, not determinative but indicative, of bundling of services in the ordinary course of business are: there is a single price or the customer pays the amount no matter how much of the package they actually receive or use. The elements are normally advertised as a package. The different elements are not available separately. The different elements are integral to one overall supply. If one or more is removed, the nature of supply would be affected. Okay. There is going to be a single price, so it is like a bundle only. And elements are normally advertised as a package, and different elements are not available separately. Okay, no straitjacket formula can be laid down to determine whether a service is naturally bundled in the ordinary course of business. Each has to be individually examined in the backdrop of several factors, some of which are outlined above. The above principles explained in the light of what constitutes a naturally bundled service can be gainfully adopted to determine whether a particular supply constitutes a composite supply under GST, and if so, what constitutes the principal supply, so as to determine the right classification and rate of tax of such composite supply. Some of the examples of composite supplies have been given below. A 5-star hotel is booked for a conference of 100 delegates on a lump sum package with the following facilities: accommodation for the delegates, breakfast for the delegates, tea and coffee during conference, access to fitness room for the delegates, availability of conference room, business center. As is evident, a bouquet of services is being provided. Many of them are chargeable to different rates of tax. If the principal service is described as convention service, it is able to capture the entire essence of the package. Thus, the principal service may be judged as convention service and charged to tax accordingly. However, it will be fully justifiable for the hotel to charge individually for the services as long as there is no attempt to offload the value of one service onto another service that is chargeable at a concessional rate. Poshak manufacturers entered into a contract with Chiku Limited for supply of ready-made shirts packed in designer boxes at Chiku Limited's outlet. Further, Poshak manufacturers would also get them insured during transit. In this case, supply of goods, packing materials, transport insurance is a composite supply wherein supply of goods is the principal supply. When a consumer buys a television set, he also gets a mandatory warranty and a maintenance contract with the TV. This supply is a composite supply. In this example, supply of TV is the principal supply. Warranty and maintenance services are ancillary. A travel ticket from Mumbai to Delhi may include service of food being served on board, free insurance, and the use of airport lounge. In this case, the transportation of passenger constitutes the predominant element of the composite supply and is treated as the principal supply, and all other supplies are ancillary. How to determine the tax liability on composite supplies? A composite supply comprising of two or more supplies, one of which is a principal supply, shall be treated as a supply of such principal supply. Accordingly, the entire value of composite supply shall be classified under the category of the main supply and shall be and shall be taxed at the GST rate applicable to that main supply. This can be understood with the help of the following example. Rati Computer supplies laptop worth rupees 52,000 along with a laptop bag worth rupees 3,000 to a customer for 55,000. Being naturally bundled, supply of laptop bag along with the laptop is a composite supply which is treated as the supply of the principal supply. Assuming that the rate of tax applicable on laptop is 18% and bag is 28%, in the given case, rate of principal supply will be applied, which is 18%. Now some specific issues, the clarification has been given. Printing industry. The printing industry in India is in particular faced a dilemma in determining whether the nature of supply provided was that of goods or services. Another doubt was whether in case where certain contracts involved both supply of goods and services, whether the same would constitute a supply of goods or services, or if it would be a composite supply, and in that case, then what would constitute the principal supply. It is clarified that supply of books, pamphlets, brochures, envelopes, annual reports, leaflets, cartons, boxes printed with the logo, design, name, address, or other contents supplied by the recipient of such printed goods or composite supplies, and the question whether such supplies constitute supply of goods or services would be determined on the basis of what constitutes the principal supply. In case of printing of pamphlets, brochures, annual report, where only content is supplied by the publisher or the person who owns the usage rights of the intangible inputs, while the physical inputs including paper used for printing belong to the printer, supply of printing is the principal supply, and therefore such supplies would constitute supply of service. However, in case of printed envelopes, letter cards, printed boxes, tissues, napkin, wallpaper, etc., by the printer using its inputs including paper to print the design logo supplied by the recipient of goods, predominant supply is supply of goods, and the supply of printing of the content is ancillary to the supply of goods, and therefore such supplies would constitute supply of goods. Food supplied to the patients. Food supplied to the inpatients as advised by the doctor or nutritionists is a part of composite supply of healthcare and not separately taxable. Other supplies of food by a hospital to patients or their attendants or visitors are taxable. Activity of bus body building. In the case of bus body building, there is a supply of goods and services. Thus, classification of this composite supply as good or service would depend upon which supply is the principal, which may be determined on the facts and circumstances of each case. Retreading of tires. In retreading of tires, which is a composite supply, the predominant element is the process of retreading, which is a supply. Rubber used for retreading is an ancillary supply. Supply of retreaded tires, where the old tires belong to the supply of retreaded tires, is a supply of goods. Okay. Now it has clicked for me. The insight has come. Now let's see. I was having a big open loop about this retreading thing. Now let me quickly tell you what what insight I got. Now let's say there is a tire. I am a tire mechanic. You are a customer and you have an old tire. You have a car and that tire has become old. So buying a new tire will be costly. So you want to just retread it. So the tire is yours. You just gave it to me. You came to my workshop and you gave it to me. I will do the retrading for you, which means I'll add grip and everything. I'll do the retrading for you and give it back to you. So the tire was originally yours. I only did the repair work, some improvement work, and then I gave it back to you. So this is a pure nature of service, supply of service. However, let's say I have my own old tires because I am a mechanic, right? I belong to this tire industry, so I will have lots of old tires. If I take those old tires and I retrade it by myself and keep it like a packaged, like a saleable package of goods, and then you come to me directly and you discard the old tire and you buy the new tire afresh, or let's say you don't have any old tire also, you just buy the retreaded tires from me as a goods. So in that case, that will be supply of goods. So again, could they have written this in a little better way? Yes, they could have written in a better way. This is what was confusing me. Supply of retreaded tires where the old tires belong to the supplier. I was wondering where the old tires belong to the supplier. So again, they could have written it a little, they could have dumbed it down a little more. They could have explained it. Anyway, cool. This is round 4. Now we got it clarified. Okay. Retread or revamped tires. Retread tires or revamped tires on which the worn out tread is replaced using new tread. Okay, all good. Now the last page of this segment. Supply of food and beverages at cinema halls taxable as restaurant service. Eating joint is a wide term which includes refreshment or eating stalls, kiosks, counters or restaurant at a cinema hall. I think again there is a typo here. Cinema also. I think it should be a cinema hall. The cinema operator may run these refreshment stalls themselves or they may give it on contract to a third party. The customer may like to avail the services supplied by these refreshment counters or choose to not avail those services. Further, the cinema operator can also install vending machines or supply any other recreational service such as coin operated machines which a customer may or may not avail. It is hereby clarified that so the thing is, in a cinema hall there will be a canteen, refreshment center where you can go and order food and everything, get popcorn and everything, cool drinks and everything. So that is one thing. And then you also have this like small video game shop or some weighing machine, something like Daily Fortune, something like that. It is to be clarified that supply of food or beverages in a cinema hall is taxable as restaurant service as long as the food or beverage are supplied by way of or as part of a service and supplied independent of the cinema exhibition service. The food or beverages are supplied by way of or as part of a service and supplied independent of the cinema. So there is a theatre, but outside the theatre there is a cine complex. There is an eating joint. You can go and eat there, where the sale of cinema ticket and supply of food and beverages are clubbed together. So let's say I charge 200 rupees along like an air ticket. So in that booking itself, you book it like cinema ticket price 150 rupees and then you add like 70, 80, 100 rupees for food things. So you totally sell it like a package of 300 along. So you get inside the package one plate of popcorn plus fries plus cool drinks is already included in that package, and then it is sold as a bundle. Then I think it will be treated as cinema exhibition service. And such bundled supply satisfies the test of composite supply. The entire supply will attract GST at the rate applicable to service of exhibition of cinema. So how we can understand this is, the next time you go to a cinema hall, you see your book, you booked a ticket, and in that ticket there will be only one fare, cinema exhibition charges or something like that, admission charges or entry charges, they will charge 120, 140, and maybe for that there will be a separate GST. Then you actually go to the cinema, you come out at the interval time, you go to the food canteen, there they will charge an entirely separate bill. So in those cases, it is supply of restaurant bill. So you pay a separate amount at the counter, at the food counter, and that will have a separate amount of GST. So then it is not a bundled service, it's a separate service. But let's say some theater thing, when you book the ticket the next time, the booking itself, like when I book an air ticket, I will first book the seat and base fare will be added, and then meal option will be chosen. Meal option will be provided, so I will choose one thing where what I want, what beverage I want, what solid meal I want, all those things. So like that, if the theater service itself adds that, okay, what food do you want along to watch along, then if you book it, and when the seat number will be allotted to you during the movie itself, if the one person waiter from the food area will come to the proper seat and give it to you and leave, so you don't have to get up from the seat. So in that type of situation, it will be sold as a bundled service. So the main service is the cinema exhibition service, so the entire thing will be charged under GST on that cinema exhibition service rate. Okay, so on that note, let us go to the next segment. We have completed segment number 2. Now let us go to segment number 3, charge of GST, round 3, page number 28 to 33. Person liable to pay GST on GTA service. GTA services are taxable at the following rates. Now let me directly get into this. So person liable to pay tax under GTA service can be classified into two. One is 5% rate and this 12% rate. If you choose 12% rate, then the transporter, the GTA themselves, will have to pay the tax because it will be charged as forward charge. But if you choose 5% rate, and if you still voluntarily say that I will file the GST myself, pay the GST myself, then you can still go for forward charge, but it will be charged at 5%. Here the last option is GST specifically chooses that I don't file GST and all. So then in that situation, reverse charge will apply. But in this case, 5% where GTA has not taken input tax credit used in supplying service, GTA exercises the option to pay itself GST and does not exercise the option to pay itself GST. So in that cases, 5%. 12% is when there is no restriction on ITC. So generally I don't think nobody will use this 5% thing, because in this case I am not getting input tax credit. At the same time I have to pay charge GST. So generally mostly no transporter will go for this. Either the transporter will go for reverse charge, put the burden on the recipient, you pay whatever GST you want, and or they will go for and forego ITC. Definitely here ITC will not be there, or they will, if they need ITC, they will go for 12% GST and they will do it forward charge basis. Okay, person liable to pay GST on renting of motor vehicles service. Services by way of renting of any motorcycle vehicle designed to carry passengers where cost of fuel is included in consideration from the service recipient are taxable at the following rates: 5%, 12% again. Now let us see this diagram directly. If GST is payable at 5%, supplier is other than body corporate. So the driver is not a body corporate, but the client is a body corporate, then definitely reverse charge. Okay, so the person who drives the car and the person who is the client, and the driver is just not a company but the client is a company, then definitely reverse charge. However, supplier is other than body corporate, recipient is also other than body corporate. Supplier is an individual or a firm, and a recipient is also an individual or a firm. then forward charge. Okay, so if the recipient is not a body corporate, then there is no reverse charge. Okay, so whoever is the body corporate has to pay tax, but if both of them are not body corporate, then it has to be paid by the supplier. This is a good way to understand. Then the third option is if the supplier is a body corporate, and I don't think there will be any ITC here, so they can charge GST at 5% at a reduced rate by foregoing ITC, and then but then they still have to pay tax. If you are, and then finally, if you are going for a 12% GST with all the input tax features and everything, then you are the one who's supposed to pay tax forward charge. Okay, first condition, 12% tax payable, 100% forward charge, and you will get ITC also. If you go for 5% option, then you have to see whether you are a body corporate or not a body corporate. Let's say you are a supplier, and you supplier, you are not a body corporate, but I am the client. But if I am corporate, then it is 100% reverse charge. But let's say you are the supplier, you are not a corporate, and I am also the recipient, and I am also not a corporate, then it is forward charge. You can choose 5%, whatever you want. If you are a body corporate, it doesn't matter whether the recipient is a body corporate or not. If you are a body corporate, forward charge. Okay. So now we have to see the distinction between service of renting of motor vehicle versus service of transportation of passenger. So instead of reading this fully, I will quickly summarize this provision as well. Services of motor vehicle designed to carry passenger is the service where, let's say, I am the driver and you are the client. You hired me. Let's say I recently went from Delhi to Jaipur. I hired a car myself. So for the whole day I hired the car for that entire 270-300 kilometer stretch. So 4 hours, 5 hours, the car was under our control. So if we wanted to break at a place for breakfast or lunch, it ran as per our schedule. So let's say if we wanted to go some 10-20 kilometers, we have to do some sightseeing. Yes, we will go in that route. So we have taken that car totally on hire. But let's say service of transportation of passengers, it's that example where we book an omnibus. Let's say if I want to go from Chennai to Bangalore under a proper bus transport, let's say KPN service or this Hebron, then the bus time, everything will be decided by them. I just paid for my seat. So, and then I get myself transported, and I have to go to the place where they ask me to assemble, and I also have to get down at the place where the bus goes. So I can't get myself dropped at my home. So that's the difference between both the services. So this reverse charge mechanism situation will come only if that first situation where the car is totally under your control. It's a cab service. So that is under RCM. Okay, moving on. Taxability of remuneration paid to the director. In order to determine the leviability of tax on the remuneration paid to the directors, we first need to ascertain whether the director is an employee of the company or not. Following two situations are possible. Services provided by the independent directors or those directors by whatever name called who are not employees of the said company to such company instead of remuneration as the consideration for the said services are clearly outside the scope of Schedule 3. So if I am a proper employee of the company and if I am a proper employee of the company and I am a director, then whatever the remuneration that I get will be considered as a salary in the capacity as an employee. Therefore, it is already outside under the scope of supply, so it will not be taxed in the first place itself. However, if I am an independent director or some other non-executive director where I am not an employee of the company, in that situation, like a third party, I am acting like a consultant. In that situation, it is squarely outside of the scope of employer relationship. So you will be like a consultant client type of relationship. Therefore, tax has to be charged, and then it will be charged on the reverse charge basis. So contract of service or contract for service. Contract of service means you work like an employee. Contract for service is like you work like a freelancer or you work like a consultant. Okay, the part of director's remuneration which are declared as salaries in the books of a company and subject to TDS under section 192 of the Income Tax Act are not taxable, being consideration for services by an employee to the employer in the course of or in relation to his employment in terms of para 1 of schedule 3. Further, a part of employee director's remuneration which is declared separately other than salaries in the company's accounts and subjected to TDS under 194J as fees for professional or technical services are treated as consideration and are outside the scope of Schedule 3 and therefore taxed as per reverse charge. So you can also decide how the TDS is made. If the TDS is made through 192 section of Income Tax Act, then it is it is under employment, therefore no supply. If it is deducted as per 194J, then it is professional fees, so you work like a consultant and there is no employment relationship. The next thing is tax on services supplied by director of a company in his capacity, such as renting of immovable property to the company or body corporate, not payable under reverse charge mechanism. Tax on services supplied by director. So sometimes director can rent his house to the company like to be functioned as a guest house or something. In that situation, it's a personal service done by the director to the company. So reverse charge will not apply to that situation because the nature of service itself is different. Even though he is a director, the process of renting his residential place for the company to be used as a company's guest house is not in his capacity as a director. So he may be director, but the renting process in this renting agreement, he is like landlord and company is the tenant. So therefore, reverse charge mechanism will not apply here. Only those services supplied by director of a company which are supplied by him in the capacity of director of that company shall be taxed under RCM. Okay. Sindhu Transporters, an unregistered GTA, provides the services of transportation of goods by road to Bindusar manufacturers registered under GST. So obviously in this case, this is an unregistered person, RCM will apply and you will get only 5%. Bindusar has to pay 5% GST. Neelanchal Chamber of Commerce organized the business summit. Safal Private Limited, a manufacturer of ready-made garments, sponsored the summit and paid a sponsorship fee of 1,20,000 to Neelanchal Chamber of Commerce. Mr. Godbole, an independent director of Safal Private Limited, provided services worth 50,000 to the company. The value on which Safal Private Limited is liable to pay GST. Sponsorship service totally 1,70,000. Even though there are two independent supplies, the service recipient is Safal Private Limited. One is sponsorship service and the other is directorial service. So both in both situations, Safal Private Limited is the recipient of service and both will be covered under RCM. So total GST they will pay is the consideration on 1,70,000. We have completed this as well, round 3. Next, let us talk about round 2, page number 50 to 55. Let's go to segment 4 of today's study session. Turnover limit for opting for composition levy. Turnover limit in case of composition levy under subsection 1. 10 subsection 1 provides the turnover limit of 50 lakhs in the preceding financial year for becoming eligible for composition levy under section 10 subsection 1. However, proviso to section 10 subsection 1 empowers the government to increase the said limit of 50 lakhs to 1.5 crores on the recommendation of the GST Council. In view of said power of the government, the turnover limit for composition levy under section 10 subsection 1 has been increased from 50 lakhs to 1.5 crores. However, the said notification further stipulates that the turnover limit for composition levy under section 10 subsection 1 shall be rupees 75 lakhs in respect of 8 special category states: Arunachal Pradesh, Uttarakhand, Mizoram, Manipur, Nagaland, Sikkim, Meghalaya and Tripura. So the special category, all northeastern states except Assam is included in that special category. Apart from that, Uttarakhand is also included. What are not included are Assam, Himachal and Jammu and Kashmir. The turnover limit will be 1.5 crores only. Thus, if the aggregate turnover of a supplier in a state or union territory other than special category states is up to 1.5 crores in the preceding financial year, said supplier is eligible for composition scheme under section 10. Further, it is important to note that the aggregate turnover is computed on all India basis for a person having same PAN. Okay. A shoes dealer Prithviraj has offices in Maharashtra and Goa. He makes interstate supply of goods from both these offices. In order to determine whether Prithviraj is eligible to avail benefit of composition scheme under section 10, turnover of both the offices would be considered. And if the same does not exceed 1.5 crores in the preceding financial year, Prithviraj can opt to avail composition levy for goods for both the offices in the current financial year. Further, the option of a registered person to avail composition scheme under section 10 subsection 1 shall lapse with effect from the day on which his aggregate turnover during a financial year exceeds the threshold limit of 1.5 crores. Or during the financial year exceeds the threshold of turnover limit in case of composition levy under section 10 subsection 2a. 10 subsection 2a provides the turnover limit of 50 lakhs in preceding financial year for becoming eligible for composition levy under section 10 subsection 2a. A hairstylist Billu Barber has his salon in Delhi and Haryana making interstate supplies. In order to determine whether Billu is eligible to avail benefit of composition scheme under section 10 subsection 2a, turnover of both the salons would be taken into account, and if the same does not exceed 50 lakhs in the preceding financial year, Billu can opt to avail the composition levy scheme for both the salons in the current financial year. Further, the option of a registered person to avail composition scheme under 10 subsection 2a shall lapse with effect from the day on which his aggregate turnover during a financial year exceeds the threshold limit of 50 lakhs. 10 subsection 3. To summarize, a registered person opting for composition scheme under 10 subsection 1 should have an aggregate turnover up to 1.5 crores in the preceding financial year. He can avail the benefit of the same for the current financial year till the time his aggregate turnover in the current financial year does not exceed 1.5 crores. Similarly, a registered person under section 10 subsection 2a up to the turnover of 50 lakhs in the preceding year can use the benefit till the time his aggregate turnover has not crossed the 50 lakhs in current financial year. From the above discussion, it is apparent that the aggregate turnover, that term, is of utmost importance. So let us understand them in detail. Aggregate turnover under composition levy section 2 subsection 6 read with explanation 1 to section 10. The definition of aggregate turnover as contained in section 2 subsection 6 of the CGST Act is analyzed as follows. The aggregate turnover is the sum of value of all outward supplies falling in the four categories: taxable supplies, exempt supplies, export of goods or services, or both, interstate supplies. It excludes the value of inward supplies on which tax is payable by a person on reverse charge basis, and also it excludes the taxes paid under the GST law. It is computed on all India PAN basis. So if I have multiple PANs, all the PANs will be clubbed together and the limit will be checked. Further, explanation 1 to section 10 clarifies that for the purposes of computing aggregate turnover of a registered person for determining his eligibility to pay tax under this section, aggregate turnover includes values of supplies from 1st April of a financial year up to the date of his becoming liable for registration, and excludes value of exempt supply of services provided by way of extending deposits, loans, and or other advances insofar as the consideration is represented by way of interest or discount. On combined reading of the aforesaid provisions, the method of computing the aggregate turnover for the purpose of determining the eligibility of a registered person for the composition scheme can be depicted as follows. So first is included all taxable supplies, exempt supplies, everything, export, interstate supply, everything is included, and included all the supplies under the same pan will be clubbed, every separate registration, but if the base pan is same, it has to be clubbed. Excludes CGST, SGST, UTGST says value of inward supply based on reverse charge, value of exempt supply of services provided by way of extending deposits insofar as the consideration is represented by way of interest or discount. Okay. Rates of tax under composition levy scheme, section 10 and section 10 subsection 2a read with rule 7. Rule 7 prescribes the rate at which tax is payable by a registered person opting for composition levy under section 10 subsection 1 and composition levy under section 10 subsection 2a. Rates of tax in case of composition levy under section 10 subsection 1. A registered person opting for composition levy under section 10 subsection 1 shall pay tax calculated at the prescribed rates during the current financial year instead of the tax payable under regular scheme. Manufacturer other than manufacturers of notified goods, that is ice cream, pan masala, tobacco, aerated waters, fly ash bricks, fly ash aggregates, fly ash blocks, bricks of fossil meals, or similar siliceous earths, building bricks, earthen or roofing tiles. So the rate is 0.5% of the turnover. So one tax is 0.5%. So in total it will be 1%. Suppliers making supplies referred to in clause B of para 6 of schedule 2. This is basically restaurant service. 2.5% tax. Any other supplier eligible for composition levy under section 10 of CGST Act and chapter 2 of CGST rules, 0.5% of turnover of taxable supplies. So manufacturers other than manufacturer notified goods. So manufacturers 1%, restaurant service 5%, and any other supplier 1%. So till here we had completed. Till here we had completed in yesterday. Now let us start from today's new quota. Taxpayer Tolaram is a manufacturer who has opted for composition levy under section 10 subsection 1 having one unit A1 in UP and another unit A2 in MP. Total turnover of two units in the preceding year was 115 lakhs, that is 1 crore 15 lakhs, 80 lakhs plus 30 lakhs. Turnover of units A1 and A2 in the first quarter of the current financial year is 5 lakhs. So first of all we have to see this guy is a manufacturer. So if you are a manufacturer, then 10 subsection 1 will apply. So dealer, okay, basically if you are not a service provider, this will apply 10 subsection 1. So the limit is 1.5 crores. The limit has been extended, and he is not belonging to either of any of these special states. So he is eligible for composition scheme. Okay, that's the first thing. Compute the amount payable under composition levy under section 10 subsection 1 and 10 subsection 2 by Tolaram. So in the first quarter of the current financial year, he has units A1 supplied 5 lakhs worth and units A2 supplied 10 lakhs worth. Therefore, what is the thing? He is a manufacturer, isn't it? He is a manufacturer other than the manufacturer on notified goods. So his rate will be 1% in case of intrastate supplies. So unit 1, turnover in the previous year, turnover in first quarter. So 1% tax will be applicable. Effective rate will be 1%. Okay, illustration 2. taxpayer Bolaram is a trader who has opted for composition levy under section 10 subsection 1 of both taxable and exempted goods, goods exempted by way of notification. Okay. It has one retail showroom A1 in Punjab and another retail showroom A2 in Rajasthan, both selling taxable as well as exempted goods. Total turnover of the two showrooms in the last financial year was 115 lakhs, 85 plus 30. Turnover of showrooms A1 and A2 in the first quarter of the current financial year is 35 lakhs, 15 lakhs from sale of taxable goods and sale of exempt goods. So it does not matter at all whether taxable goods or exempt goods. For the purpose of computation of aggregate turnover, you have to include everything. So you just see the entire 35 lakhs as a whole and entire 20 lakhs as a whole. Now it has crossed 55 lakhs. So the limit is what? He is registered under 10 subsection 1 only. So he still has the limit of 1.5 crores. Compute the amount of GST payable. So I was just wondering if they have given a situation where his exemption limit he has crossed the exemption limit. So when he ceases to be a composition, when does he cease to be a composition player? The moment his combined turnover crosses 1 crore 50 lakhs in the current financial year, he will become a normal taxpayer. Now my next question is, let's say my turnover has become 1.6 crores. So for the first 1.5 crores of collection, will I still get the composition benefit, or for the entire 1 crore 60 lakhs I will have to pay like a regular tax? That's my next question. Anyway, let's see. Compute the amount payable by Bolaram. So A1 showroom 35 lakhs total and so turnover in previous year 85 and 30. For current year, you just remove all the exempt supply and bring only the taxable supply. 5 lakhs taxable, 5 lakhs here, and then 10 lakhs sale of taxable goods. For the purpose of tax computation, you should not actually include exempt goods, so you have to be very careful. For computation of aggregate turnover, you have to include, so you have to see totally 35 plus 20, 55 lakhs. But for the purpose of tax, 5 plus 10 we have to bring. Okay, rates of tax in case of composition levy under section 10(2)(a). A registered person opting for composition levy under section 10(2)(a) shall pay tax at 3% of the turnover of supplies of goods and services in the state or union territory. So this is 10 subsection 1, 1%, 5% and 1%. So again 10 subsection 1 is for general suppliers, 10(2)(a) is for the people I think who do service, but it is based on 50 lakhs limit. Okay, taxpayer Padmavati is a saloon stylist. See again, it's a service provider who has opted for composition levy under section 10(2)(a), having one branch in B1 in Vasant Kunj, Delhi, and another branch B2 in Gurgaon, Haryana. The total turnover of two branches in the last year was 45 lakhs, so eligible for composition levy this year. The turnover of branches B1 and B2 in the first quarter of current financial year is 5 lakhs and 10 lakhs respectively. Compute the tax amount payable. 5 lakhs, 6%, effective rate is 6%. Here also effective rate is 6%. As seen above, since the tax under composition scheme has to be computed as specified percentage of the turnover in the state of or union territory, it is pertinent to understand what is turnover in state or union territory. Okay, section 2 clause 112. Turnover in state, turnover in union territory. Turnover in state or union territory means the aggregate value of all taxable supplies excluding values of inward supplies which is chargeable under reverse charge, and exempt supplies made within all taxable supplies and exempt supplies by a taxable person, export of goods or services or both, and interstate supplies of goods or services or both made from the state or union territory by the said taxable person but excludes the GST amounts. Further explanation 2 to section 10 clarifies that for the purposes of determining the tax payable by a person under this section, the expression turnover in state or turnover in union territory shall not include the value of supplies, namely supplies from 1st April of a financial year up to the date when such person becomes liable for registration under this act. Okay, just now I was talking about this. And exempt supply of services provided by way of extending deposits. Okay. Tax payable under this section, the expression turnover in state or turnover in union territory shall not include the when such becomes liable for registration under this act. First approval. On combined reading of the aforesaid provision, the method for computing turnover in state or union territory can be depicted with the help of a diagram. All taxable supplies and exempt supplies and interstate supplies and everything. While computing turnover in state or union territory of a supplier other than manufacturer and restaurant service provider eligible for composition levy under section 10, trader, etc., the exempt supplies will not be taken into consideration. Okay, exclusion CGST, SGST, UTGST, IGST says value of inward supplies on which tax is payable under reverse charge, value of supplies from the first day of April of a financial year up to the date when such person becomes liable for registration under this act, value of exempt supply of services such as by way of extending deposits, loans or advances insofar as the consideration is interest or discount. Okay, so we will just read this example and we will close for the day. A photographer Champak has commenced providing photography services in Delhi from April this year. His turnover for various quarters till December is as follows. April to June is 20 lakhs, July to September is 30 and October to December is 20 lakhs. In the given case, since Champak has started the supply of services in the current financial year, his aggregate turnover in the preceding financial year is nil. Consequently, in the current financial year, he is eligible for composition scheme under 10 subsection 2A. He becomes eligible for the registration when his aggregate turnover exceeds 20 lakhs. That is there. While registering under GST, he opts for composition scheme under section 2A. For determining his turnover of the state for payment of tax under composition scheme under section 10(2)(a), turnover from April to June period shall be excluded. Okay, as the value of supplies from the first day of April of a financial year up to the date, okay, he becomes liable or to be excluded for this purpose. Okay, on the next 30 lakhs turnover of he shall pay tax at a 6%. Okay, by the end of July to September quarter, his aggregate turnover reaches 50 lakhs. Consequently, his option to avail, okay, here I have a basic doubt, including 50 lakhs or when it reaches 50 lakhs or when it exceeds 50 lakhs. Does not exceed 50 lakhs. So 50 lakhs should also be included, isn't it? Turnover limit of 50 lakhs. Okay, so I think when it hits 50 lakhs, I think you'll be removed from composition scheme. By the end of July-September quarter, his aggregate turnover reaches 50 lakhs. While computing aggregate turnover for determining Champak's eligibility, value of supplies from the first day of April of a financial year up to the date when such person becomes liable for registration under the Act are included. Consequently, his option to avail composition scheme under section 10 subsection 2A shall lapse by the end of July-September quarter, and thereafter he is liable to pay tax at the normal rate. Okay, so therefore the moment you cross the limit and you cease to become a composition player, you become a regular taxpayer, then from that moment, whatever the new supplies that you are making, that will be charged under regular tax. So whatever the old supplies that you made until that 50 lakh limit or 1.5 crore limit, that will be still given the reduced rate only, composition rate only. Okay, so that's a good understanding we have had today. From here, page number 60, we will start tomorrow. On that note, let us wrap up today's session. It was quite a productive one. So I'll just make note here. Page number 56 to page number 3.59, 29th October. Thank you guys. I'll meet you tomorrow. Bye.